Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, I'm back behind the mic fired up because the stock market's down, but we're still generating quality cash flow. Yeah, our stocks are down, but we're not going to lose focus. We're going to stay in the game and we're going to generate the monthly cash flow we need to pay the bills. Now, if this is the first time you've ever been to my channel, that's what we talk about. All my videos here talk about how to generate cash flow. It's not about stock appreciation. It's about using stocks to generate real cash that we can put on the table and use to pay the bills. This is a different YouTube channel than what you might experience out there with those that are trying to generate an income with YouTube videos. What I do here is this. For the past 5-6 years, I've been using a portfolio about the size of $225,000, trying to generate income as if I were in retirement. Now, 6 years ago, I did a video for my mentor, Jerry. Now, a lot of you know Jerry, and Jerry's doing quite well. I did that video because Jerry and I would talk during the week. During the weekends, we wouldn't talk. So I wanted to do a video asking him some questions, showing him a trade. That video was the beginning of this YouTube channel, where what I wanted to do is show you the world through my eyes. An active, successful trader, where I literally started out not knowing anything to now where we're managing trades. We've generated over $425,000 over the past 5 and 6 years selling premium, writing cover calls, selling cash secure puts. So if you're out there searching for an income source, learn the selling premium strategy. It could be your chance to take your financial freedom in your own hands like I have. Now look, before we get to today's video where I'm going to show you 2 trades. One of them is a trade I just did with PayPal. I want to show you how the trade started. About midpoint in the trade, I want to kind of give you a feel as to how I was feeling and then how it ended. We did pocket some premium profit. Okay, premium only profit. The stock is considerably down, but we put cash flow on the table. The second stock I'm going to show you is a stock that I use continually to double my dividends. And right now, the stock is trading exactly where I like to potentially put on a covered call so I can collect what is the company's quarterly dividend selling premium. We're going to talk about that. That's a strategy I call doubling my dividends, where I use a company's off-event months to try to generate 1 extra dividend in cover call premium. I'm going to show you that trade here today. But hey, look, if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. I'm looking at this number here. We have been sitting at 9,700 subscribers for about 6, 7, 8 months. I tell you, man, people are turning off the stock market. They just can't look at it. And to be honest with you, they just do not want to hear it. I remember this back in 2000 when the stocks crashed in the dot-com boom and bust. CNBC had its worst ratings back then. Nobody wants to see their wealth just absolutely being eroded. So what they do is they turn off the stock market. Now, that's okay if you're just a buy and hold investor. I just had dinner with a guy the other night. He said, hey, I haven't lost a nickel because I haven't sold. Well, I get that mindset. He's a buy and hold investor. I get it. Well, what I'm here to tell you is I can't turn off the stock market because I need to generate cash flow every single month. See, he's blessed where he doesn't need to generate cash flow using the stock market, but we do. We in retirement, we're going to use a small portfolio and we're going to use that portfolio to make the money that pays the bills instead of us going to a 9-to-5. So we have to keep watching the market and we have to keep using the stocks that we've purchased or the cash we have to either write covered calls or sell cash secure puts. This is the mindset you have to have. Okay, everybody talks on the internet about people that talk about mindsets are absolutely frauds. Yeah, you'll see all these great YouTube channels just knocking down anybody out there talking about the stock market and a mindset. right? They always think people are trying to trick them, hoodwink them, and the mindset speak is so vague and you can't really put your arms around it. But look, what I'm here to tell you is this. If you don't have the mindset up here, then you'll never have the success you want. I'm sorry. Those YouTubers out there just making videos for YouTube money, they just talk down people that talk about mindsets. They're not real. Okay? I'm real because I'm using my real money. I'm either winning, losing, getting my ribs kicked on some of these trades. If I don't have the mindset to stay strong in this, just think of my PayPal and Square purchases. We're talking, I traded those at 180. These things are trading at 80 and below. If I don't have the positive half cup full mindset, I'd be in the fetal position on the ground, not generating income. So what I want you to do is turn around. I want you to turn around the mindset. I want you to start facing your challenges. And what we're going to do is we're going to find the silver lining somewhere in this hella stock market disaster. Now, look, with that said, let's go ahead and talk about one of my most recent trades with PayPal, where actually I thought my shares were going to be taken away. I did not have them taken away. I want to show you what I'm thinking, show you the world through my eyes. So let's go over to that trade. I'm going to show you how that trade played out and how much money I made. Now, here's the results of that trade. I end up pocketing $449 of premium only. See, I own the shares at about 95. Right? The stock has been trading higher and lower. Actually, PayPal's trading in a great range here between 88 and about 98. Well, I'm going to show you the chart here in a minute, so stick around. But this is what my members get when I complete a trade. Well, in fact, they get all of my trades. They see every single one of my trades. And to be honest with you, does that say 163 trades this year? Yeah, that's right. I am here to generate cash flow as if I were in retirement. See, I want to live the good life. I do not want to go to a 9 to 5. So I have to keep staying the course. Okay? So that's what we do here. We try to stay the course. Now, thinking about PayPal here, I had to stay the course because there was a moment where I was going to have my shares taken away. And it really didn't bother me. The way I see it is this. PayPal is a stock I'm going to use. And if my shares are taken away, that's a good thing. A lot of people email me all the time saying, look, I don't want my shares taken away, or they think it's a bad thing. Well, in the case of PayPal, if I have a $95 strike and I'm selling premium along the way, meaning I write a covered call for 30 days, they don't take my shares because the stock doesn't finish above the strike price or the price for which I'm going to let them take my shares away from me, well, I keep the shares. And now we're going to do it again. We're going to spin this forward every single 30 days, pocketing this kind of money. This is not profit. This is cash flow on the table. I am down on these shares. Right now, PayPal is trading for about $88. I'm in at 95. So there's no profit here. However, that is real cash flow on my table that I'm going to pay bills with. This is the mindset. We are not a buy and hold channel here. What we do is we use our stocks to generate cash flow. How many times do I need to reinforce that? Because that is the goal. But also want to reinforce that PayPal is nothing more than a tool in my tool bag. And I need to use that tool to generate cash flow. Now, as you can see, PayPal was trading at about $93 when I made this trade. And as the stock's moving through the 30 days, it actually gets above my strike price of $95. It ends up closing lower. I end up keeping my shares. I ended up buying this option back, an option for which I got $4.50. Okay, this is on one contract, so that's $450 in my wallet. And as this trade is playing out, I end up buying this option back on day of expiration just to clear it. I paid 1 penny. Now I can wake up Monday morning, and if we get a green day, I can go ahead and write another 30-day covered call. In fact, I looked at a 30-day covered call on PayPal for the 95 strike, and I still can get over $3.50. And I think that's what we're going to do. Now, let's go to the chart. I'm going to show you how PayPal is trading, but I'm going to show you how I was watching PayPal throughout these 30 days. Now, I know you're out there saying, wow, he has a membership. Well, yeah, I do. And you know that. I've had it about 3 years now, actually showing all my members the world through my eyes, whether it be all of my trades in and out. So if you want to be a part of the membership, I give you 1 free month, and I'll tell you what, it's like 45 cents a day. Sign up. There's not much obligation there. But hey, look, I would love to welcome you aboard. And if you're out there on a boat, a rudderless boat, you need maybe a second set of eyes on some of the trades you're thinking about doing, or maybe you have some questions you want somebody to answer directly. Well, guess what? You have access to my email. When you're a member, you get access to me. Okay, so I want you to go cptdashboard.com, click Upgraded Dashboard, get your 1 free month. I'd love to welcome you aboard. Okay, here's PayPal, and as you can see, it's trading for $86. I thought it was trading for $88. Boy, it took a dump at the end of the day. Well, here's the deal. Back here, 30 days ago, I went ahead and used my shares when they were trading at 93x, okay? When they were trading for 93x, I said, hey, my cost basis on these shares happens to be $95. So if I get $95 for my shares, right, plus $4.50 per share, that's going to be a tidy little profit, considering I obtained these shares with a cash secure put that I believe I picked up an additional $5. So the stock will be trading at 95, but old John picks up over $104.50. Do you see that? With 2 selling premium trades, I would get my $95, which is my cost basis. I get the $4.50 for this covered call right here. And the cash secure put, the money I put on the table to obtain the shares at 95, they paid me $5 for that. So all in all, this investment, the $9,500 I invested, pockets me $104.50. And the stock's trading for 95. So you see how selling premium can actually be very beneficial. It generates cash flow, but if you're not looking for the cash flow, right? The cash flow isn't the end game for you. Think about this trade. If your shares are taken away at 95, you ultimately pick up 104.50. That is absolutely the power of selling premium. Well, let's talk about this trade, because once I put this trade on, it starts to move. And PayPal gets up above 97.50. And I'll be honest with you, with the recent news over the past 3 months, PayPal could go to 110. It has been as high as 110, moving higher. Now remember, PayPal traded for $3.50 at one point, and it is kicked in the ribs, right? It's kicked in the ribs just like everything else, but this is where the value investors may come in. You know, PayPal isn't just some fly-by-night company, man. This is a huge financial institution now. So at 97.50, guess what John's thinking? If I could buy this option back up here, right, and be profitable, I can roll this at that moment, maybe sell the 100 strike, and I get more for my shares. And if I'm getting more for my shares, I'm making more money, right? Well, this is where people find themselves in trouble, because I do not do that anymore. A lot of people say, hey, John, you should have rolled that up right now. Buy your original option back, that option you got paid $4.50 for, buy it back, and then roll it for another credit headed higher. Well, here's the deal. When PayPal is moving above 95, remember, my strike price is 95. So the option, right, the option that I got paid $4.50 for has 2 elements of pricing, right? You have real money and you have time value. Now, this thing's only 15 days into trading, so there's going to be a ton of time value. There's still 15 days left. Okay, so when this thing moves above 95, that's going to be $2 of real money. This option's probably going to be worth about $7 to $8, maybe even more. So I'm going to have to buy this option back for $7 and $8. Now, take away the $4.50 I made in cash flow, so I'm in the hole about $4, maybe $5 depending. So what happens if I do this? I decide to roll it to the 100 strike, and maybe I get paid $3. Yeah, I'm going to get $100 for my shares if it finishes above $100, but I pick up $300 in near-term premium, which sounds good. Here's my problem. Remember I got paid $4.50? I paid $8 to take the obligation off the board. Well, I'm already in the hole over $4. So now I go ahead and roll it with the coulda, woulda, shoulda of having my shares taken away at 100, seeing all those fat bucks with the $100 price they're going to pay me. No. See, now what happens is I'm in the hole on this trade. It has to finish at 100. Well, guess what? Here goes PayPal, and it falls down to 86 bucks. Okay, so this trade ultimately expires worthless because remember, I got the 95 strike. It's trading at 86. They are not going to pay me 95 bucks when they could buy this for 86 bucks on the market. Okay, so I keep the entire $4.50 if I let this go to expiration, and I have my shares. Now, yeah, I have depressed shares now. They're trading for 86 bucks, but again, it's a tool in our toolkit. We are going to wake up Monday with an $86 stock, and we're going to try to sell another 30-day covered call. I've already dialed it up, and I think for a 95 strike, I might be able to get about $2 now. When I originally dialed it up when it was trading for 88 bucks, I can get almost $3.70. Now I can't. If I can write a covered call and have the strike price being 95, meaning my cost basis for this to be a clean trade, look, I pick up another $2.50 on this trade. This is essentially 60 to 90 days. We're collecting a $4.50 premium for the first covered call. We collected $5 on the cash secure put, and now we're collecting $2.50. So now you start seeing how the power of selling premium works, because if they take my shares at 95, my cost basis is clean, but the stock is literally trading at 95. It has done nothing, yet I'm pocketing well over 11 points on this trade. That is the power of selling premium. And all that money, all that cash flow is on my table paying the bills. And the buy and hold investor in PayPal, he's literally sitting there, goose egg, zero. I picked up over 11 points. If you learn how to do this and you have the mindset, I'll tell you what, this is your part-time job in retirement. Again, if you want to be a part of my membership, I give you 1 free month. What are you doing? And hey, look, if you haven't banged the like button, do it right now. Let me help you. It's right here. Bang that like button. It lets me know you like what I'm doing. Well, what we're doing is we're talking about Merck. Okay, I've been talking about Merck to the members quite a bit because Merck, Bristol Myers, and Gilead trade in such a range. It's pretty much bankable. I love how this market sell-off has happened, but these stocks just trade in that easy swinging range. And look at Merck right here. Merck, yes, it's down like everything else, but look at this trading range. Now, this is what I love to do. I own Merck shares, and it's a buy and hold stock. I literally bought it, I hold it, I collect the dividends. They pay about a 3% dividend. I collect it as buy and hold. I think my cost basis on Merck is like 25 bucks. What I love to do, in between the dividends and earnings, you have all this dead time, right? You have all this dead time with no company announcements or anything. You can usually have some smooth sailing, and we can use these shares to write a covered call. What I try to do is put the strike price out so far that it won't be challenged. And what I'm hoping to do is collect about 50 to 60 cents, which is Merck's quarterly dividend. So I'm trying to double my dividends doing this throughout the year. Now, as you can see, Merck had earnings and Merck distributed its dividend. So now we start trading in this non-company event zone. This is where the golden rules of covered call writing comes. The 2 months that you have no earnings and X dates, that's when you want to trade these stocks. The 30-day window where we're getting into earnings, you really do want to back off if you can, because that's when a stock usually is most volatile. Well, in this case, I don't want it to be volatile because I don't want my shares taken away. So here's the deal. This is what we're going to do. I love when Merck starts to trade at the top of its range, and you can see it's doing that. It did that here. It did that here. Okay? What I love to do, I love to write the covered call right here. Right? And then I put that strike price out there about $3 or $4, and I will collect essentially a 60-cent dividend. Now, it's a 60-cent covered call premium, but in my mind, it's a 60-cent dividend. So where the normal buy and hold investor collects 4 dividends, John L. tries to collect 8. Now, I don't collect 8, but I'll tell you with Merck, I probably collected about 6. And I absolutely love it. It's fun. It keeps me in the game. So every time Merck travels up to its resistance line, right? Its resistance line. That's when you want to drop that covered call right there. And you want to have a strike price out where it's not really challenged. Now, let's hypothetically say this was a nice fat 5% rally. Okay? Well, put it out there another 5%, and Merck would have to travel this 10% in this tight frame. Merck is not a high-flying stock. If it moves 5%, Wall Street's going to start taking profits. You could see that's exactly what they do because they know people are going to come back to Merck. They want a value play and a company that has great earnings, great products. Okay, so they use stocks like Merck to do exactly what I'm showing you here. Well, looking at Merck right now, you could see it's at the top of its range. So come Monday, I have over 500 uncovered shares. I'm going to look to possibly put it out there at the 91 strike. Now notice right now Merck's trading for 86. This thing would have to move $5 in a window of 30 days. And I'll tell you what, unless the markets really get on their horse and start moving, I just don't see that happening. Now here's the deal. If the stock does move above 91, well, guess what? I'm going to have to buy the option back, alleviating the obligation so I don't have my shares taken away, and we're going to try to do it again. This is what I'm trying to impress upon everyone here. We are like contractors. You ever have a contractor do any work for you where they show up, they take on your job. While they're on your job, they're on the phone looking for their next job. They always have to keep the paychecks coming in every single forward going month. Right? So I've been showing you here, I will use Merck for 30 days. And when that trade comes off the board, I immediately do it for the next 30 days. And I am rotating all of my stocks in and out. I mean, there was a point this year I had 17 trades on the books. I mean, right now I don't have that many, but we're going to get those stocks back in the game because remember, they're tools in my toolkit that generate cash flow. Okay? That's the ultimate goal here. Pay bills. All right? So think of your stocks as tools in a toolkit. Now, think of your buy and hold stocks as opportunities to collect a fifth or sixth dividend through covered call premiums. Now, the bigger picture here is this. You start to develop the skill for which you will master this. I am at a point now where I have seen damn near every situation, whether it be good, bad, or indifferent. Okay? And I'll tell you what, that builds that cast iron stomach for any market volatility. Do understand, during COVID, when the market crashed 50%, when the market crashed, everybody is literally crying in the streets. I had my biggest year, made over $109,000. I showed you it right here on the channel. Okay, so what we do is we look for opportunities, and what I showed you right here with Merck is a beautiful opportunity. Now, I'm going to show you next video how I use the poor man's covered call. Now, I've had a poor man's covered call portfolio all this year. And tell you what, I've been kicked in the ribs and it's sucking right now. But I've had some great trades within that portfolio. And I'll tell you what, we're picking up crumbs here and there to pay the bills. Just did a Bristol Myers trade, ended up making max profit. I'm going to show you how I picked that stock, why I picked the stock, and how it turned out, and how I closed the trade. That's important. A lot of people don't understand how you close a poor man's covered call trade. I'm going to show you how you do that. So I want you to subscribe to the channel right now because that is going to be my next video. And look, you might as well go to my website, cptdashboard.com, and get your free poor man's covered call tracker spreadsheet that's been downloaded over 100,000 times. Do you believe that? It's free. Had I just thrown a dollar bill on that download, I would have made 6 figures with that. It is absolutely mind-blowing that people go out and use my free spreadsheets to track the numbers. Remember why I create the free spreadsheets, okay? It's to keep the numbers in front of you. If you're going to use a stock multiple times to generate cash flow, you have to know your cost basis, and you have to keep track of all your trades. Now, my mentor, Jerry, and by the way, on my website, if you go to my website, cptdashboard.com, I want you to click on that video. It's a 6-minute video of my story with Jerry. See, none of this happens without Jerry. None of my trading and skill and learning happens without my mentor, Jerry. Now, a lot of you say, I'm your mentor. If anything, I'm your motivator. And that is what is needed in this market. Motivation, inspiration, and the mindset that we're going to be half cup full. Okay? Look, we have tools in our toolkit. We need to use them to generate the cash flow to live in retirement, live the good life. 1 free month offer. It's waiting for. It's going to expire soon. I've been saying that for a couple years now. But look, 45 cents a day to be a part of what we're doing, seeing the world through my eyes. I'm telling you what, you are missing out. I'd love to welcome you aboard. I hope you enjoyed this video, but the next video is going to be awesome, where we talk about that poor man's cover call trade where I made max profit. But more importantly, I'm going to show you how you close a poor man's cover call trade properly, making the right decisions, hopefully knocking it down. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.